All right, guys, the Case Shiller Index just came out 42 minutes ago, and another month, third month in a row of declining home prices on the 20-city Case Shiller Index. Now, the decline matches what the forecasts were of 1.3%, according to economists. It fell 1.2% in September. And year over year, though, the appreciation is still 10.4%. So a lot of the optimists out there will sit there and say, hey, it's still a 10.4% increase year over year. Well, sure. Of course it is, because you're comparing it to last year. And I'm not trying to put fear in everybody, but the home prices are definitely being affected by interest rates. But inflation is also helping home prices. And here's my example. Here's the median sales price over the last year for new homes sold in the US. Look at this increase. This is in the last since August, it went from 440 to 490. We're still seeing a big increase, over 10% in the last year. It's a 15% increase almost. So why is that? Well, inflation, guys. I talk about this over and over. So if you're new to the channel, I've done a lot of videos on this exact topic. I own a lot of real estate, and I pay attention to the long-term trends. And I always hear people, a friend of mine said, oh, I did all this research on cities and blah, 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 and I saw that no. Here's what matters. Incomes. And nominal income goes up with inflation. Costs go up with inflation. So when the cost of a home has increased over time, your home that already exists will go up in value as well. Why? Because to replace your home and for somebody to buy a new home, new version of your home, it'll cost more and more and more. Now, will your cost be the same as a brand new home? Not likely. Why? Because there's the extra added benefit of a new home. You do things that you want to do in it that take a lot less hassle than remodeling, gutting, etc. But the bottom line is, if you look at historical real estate prices on the nation, it's pretty much in line with income growth and inflation. Makes just perfect sense. Why? Because as costs go up, so do the prices of things. That's just naturally the way it is. The example I always give is our CEO here, Tim, is from Youngstown, Ohio. In 1980 to now, Youngstown has lost half its population, but the median home price has increased over that time. When people tell me to go buy in cities that are growing, I say you don't need cities that are growing. You just need inflation. That'll drive a lot of it. Now, if you have a confined space with a lot of demand, like in New York City or something like that, or beachfront property, yes, you can't create, it's harder to create more and more units in New York. You have to go up. For beachfront, you can't create more beachfront. So there's naturally an increased demand, but limited supply, and that helps. But overall, in the vast majority of the country where there's plenty and plenty of land, you're going to look at income, and on the long run, where's income, where is inflation? And that's proven here. Now, when it comes to income, you look at interest rates. Almost 2 years ago, my fiance, she locked in her mortgage at 2.625. That same mortgage today is 7.5%, almost triple. Let's call it 5% more. Her mortgage is $300,000. That means that same mortgage today is costing $15,000 extra. $1,200 a month for her to have that exact same mortgage. That's a big deal. If you're making $100,000 to $120,000 a year, $15,000 is a lot of money extra. And that's why you're going to sit there and either pump the brakes on buying, or you're going to buy a lot less house than you originally were going to. And that keeps prices down. But I am looking at the new home prices, the median sale of new home prices, and showing that prices can still increase over time. Short run, home prices on homes that already exist, there's going to be a beating on it, I think. I was saying in a lot of videos that I think home prices could still go up overall with inflation. Probably not end up being the case here, but it's not as bad as people think. Think about it this way, guys. You're looking at decrease in home prices of 1% to 2%, even though interest rates are double or triple where they were a year and a half, 2 years ago. Think about that. Think about those costs. Why? Inflation. And soon when incomes start to catch up with inflation, we are going to see higher median home prices. At what point? I have no idea. But in a long-term trend, people grow accustomed to 7-8% interest rates for a while, And that'll be led with other inflationary items and people demanding more pay at their work. Pay is a little bit harder to get back into play. It takes a little bit more time for inflation to see its way into pay, but it eventually will and cause all prices to increase. This is exactly why back in the day, I talked about how just paying people more money, having a higher minimum wage, doesn't actually make anybody wealthier. And that's being proven today. When we gave checks out in 2020 and 2021 to sit at home, it just gave people a lot of money in their pockets to go spend and no reason to work. Therefore, worker costs going up. And guess what happens? Along the way, when worker costs go up, your product and goods costs increase. And that sees all the way through from building to celery to milk, all the way along the line. And you're seeing it now playing out. 12, 13, 14 years ago, when the government issued a lot of debt, a lot of money out there, I remember saying, how is this not going to be inflationary? And I was wrong. Why? It didn't go into the hands of the people. It went into the banks, which was supposed to see its way into the people, but banks got a little bit tighter because they made so many mistakes in the 07, 06 financial crisis, okay? So remember this along the way. Home prices probably have a few more headwinds, but for you, if you currently own a home that you love, stick with it. Keep your mortgage. If you need to move, I recommend, if you have a great mortgage, can you rent your house out? Can you become a landlord? Keep that mortgage in there and make some money off of it. If you have 3.5%, even 4%, rents are going up like crazy across the country. Go rent that house out and have yourself an income property that can make you really good returns on your money, especially in a market where we have the stock market being so overvalued still. When I look at that, that's a great opportunity for those of you who were lucky enough to get a low mortgage. My fiance and I are moving into a new house in 9 or 10 months, and guess what? We are keeping our house forever at 2.625% interest or 2.65 as an investment for her forever. Because the rent we can get in our house will give her amazing cash flow because it was such a low interest rate. And that's what we care about. We're going to pay down her debt, get cash flow, and she will make a lot of money off of that. That's the key here. If you have to move now, if you must move, just realize you have to buy less house than you originally thought or rent for a while. Renting is if you don't know how long you're going to move for, be a renter. I don't think there's anything wrong with that. If I were moving to a new city now and I didn't know how long I was going to be there, I absolutely 100% would rent and would not buy. Even if rates were 3%, I'd probably still not buy. Why? I need the flexibility of moving. So this all goes together. Keep watching that Case Shiller Index. Remember, if you like these conversations, we have these conversations all the time in our community, Everything Money community. You've seen our other videos. We have a lot of great tools in the software, and we're starting a new thing of when you sign up, if a month from now you don't like it, you just email us at help@everythingmoney.com and you'll get your money back. No questions asked. Just make sure you're active in the community. And it's a free 1-month trial, essentially. You try it out for a month, sign up. Money back guarantee, 100%. Thanks very much, guys.